Are we on the verge of the biggest crash since 2008 or maybe 2000 or maybe 1987 or even all the way back to 1929? I don't know. But I do know one thing. I can show you right now exactly which direction the market is trending. But what I can't show you is how long the market will trend that way. And that's one of the cool things about trend following is that all you have to do is listen to the market, let it show you the direction it's going, and then understand you can get in and you can get out. You just don't know how long you'll be in or out on that. So we don't have to look at any sort of fundamentals, but let's be honest here. The market is driven by golden toilet tweets at this point, right? If Trump decides that he's in a bad day and he's sitting on the toilet, he's like, how about I want to buy me some Greenland, so let's throw tariffs on everybody. What are you going to do about it? What are you going to do about it? You really can't do a whole lot. But what you can do is trend trade. Now, not every trend is going to result in big outcomes, right? In fact, let's go to Tesla as an example. And what I want to show you here is our trend template. So our trend template is the 10 EMA, the 20 EMA, and the 50 EMA. Now, you can put that on any charting platform at all. Any charting platform will have the 10, 20, and 50 EMAs. There's nothing special about that. But what's special is understanding how to use those together. So your 10 period is your short-term moving average. That's like 2 weeks. Your 20 period is your intermediate term average. That's like 4 weeks. And then your 50 period is your long-term moving average. That's like 10 weeks, right? So when your short-term and your intermediate term and your long-term all work together, what do you think is going to happen? Some great things can happen, but that doesn't mean it will end up in the same place. So I love using this Tesla example because here we have the 10 over 20 price over 50, and Tesla actually moved up about 30% in this move right here. That is a huge move. Then we had the 10 over 20 price over 50, and it may have been a small loss, maybe even a break even. Both of these had the exact same input, yet two very different outputs, right? A 30% win or maybe a break even. And then a third one here at 110% up move, maybe even more. Let me double check that. 100 and how much? 110% up move right there. Now, with that 110% up move, if you don't understand the market cycle, 100% of that evaporated, right? Understanding these moving averages will keep you on the right side of the trend and also show you when to no longer be in it because it's no longer trending. Okay. But keep in mind that every time that this sets up, it is a bullish trend. And the opposite's true on the downside. It is a bearish trend to the downside. It is a bullish trend to the upside. The market tells you which direction it's going, but it does not tell you at that time how long or how far it's going to go. You have to be paying attention to that. So I love to use this example of 3 different inputs with 3 different outputs. Now, also keep in mind this, that just because this happened before does not mean that is a reliable source of it happening again, right? A 30% move followed by a break even followed by a 110% move, right? If you were to have skipped this trade because you had a small loss here, you'd probably be really pissed at yourself. And think of it from a trading psychology aspect. This is why I'm bringing it up. You must follow your plan every single time. If this is your plan, I don't know what your plan is. If you even have a plan, I would suggest you find a plan. Because we don't know what's going to happen here, even though we saw a small loss here and a decent sized win right here. Every trade is a unique instance. There are different buyers and different sellers every single day in the market. And of course, every single day after that. So you can't let the outcome of a previous trade be deterministic on what you are going to tell the market is going to happen on the next time. I want to go to SoFi next because a lot of people are stuck in SoFi right here. A lot of people are stuck in SoFi right now because they don't want to admit that even though they saw a huge move in SoFi in 2025, but it has to go up, bro. It's the future of finance, bro. Don't you understand? Right now, what I see is a stage 3 topping pattern. When the stage 2 run is over, you can tell when those moving averages start crossing back the opposite direction. Now, I'm leading to the stock market crashes here, okay? You can see the moving averages moving the other direction. And what we see right now on SoFi, which this is the future of finance. It was a $32 stock just a couple weeks ago. Now it's a $25 stock. And now what we see is the 10 is under the 20 and price is under the 50. Once again, what I'm trying to tell you here is that it will show you the direction it's going, but not the magnitude or the duration of how far it's going to go. So let's talk about market crashes. Let's talk about market crashes. What I want to do is go to August of 1929. Back in my day, in August of 1929. Now let's go to that. 1929. Oh, SoFi was not around in 1929. Let's go to SPX. That's how we can measure this. In August of 1929. 0801. There we go. Let's go to. Now, keep in mind that record keeping. Oh, this is. I don't know how I got on the 1 minute chart. Hang on. Let me do that again. Keep in mind that record keeping is not as robust as it was today or is today. So what you're going to see here is a lot of dots, but you will still see the moving averages of those dots right here. All right. So we all see the dots. We all see the moving averages. Remember, the 10 EMA is the blue line. The 20 EMA is the black line, and the 50 EMA is the red line. Now, as you can see, leading up all through 1929, this was a big, beautiful trend. This is what you're looking at, right? In fact, from, let's say, June up to the peak right there, it was about a 25% gain from June to September. But what we do see is people starting to sell off those investments, right? And I understand that these are not the most obvious things to see, but what you can see, no matter what, is the trend. Now, over here, what we see is the 10 going under the 20. Well, that's nothing, right? That's purely coincidental. There's no way that this could have happened and resulted in anything bad. You're right. We don't know how far it's going to go. And again, keep in mind, start new replay. Keep in mind that Nancy Pelosi was probably 10 years old at this point, but we couldn't see out in the future. Even she, as a 10-year-old, couldn't see out in the future. So she's watching her charts and she's like, I don't know Nancy Pelosi's husband's name. It doesn't matter. But she's already married at 10 years old because it was 1929. They did weird stuff back then. Looking at this, right? She's like, oh man, I saw the market crossed under. She's a very astute 10-year-old, by the way. And she's yet to get the forward-looking Nancy Pelosi plan. But looking at this, she even could see, you know what? The 10 went under the 20, price went under the 50. That doesn't look so good. Now, again, the charting was not as available as it was today. Right. Charting was not possible, basically, unless you like went into the bucket shops like they talked about in Reminiscences of a Stock Operator. And we're looking at it and we're watching the stock market, get weaker and weaker. Right. We're not seeing huge declines just yet. Not yet. I mean, it's down 6%, but that's not insignificant, but it's not really looking all that hot. We definitely see a bearish trend. Nancy was 10. Exactly. A bearish trend has started here. Nancy, in her infinite wisdom, was like, I don't know if I want to buy this market. And you know what happened? There was a huge gap down, like 5% just right there. And so some investors were like, buy the dip, bro. I've been watching all these YouTube videos back in 1929. All these jokers are screaming how we got to go buy the dip. So several people bought the dip. And there was still a bearish trend. 10 was under the 20. Well, I guess you could say a neutral trend at this point. 10 was under the 20. Price was under the 50. And then, you know what? Clear blue skies ahead. Nobody is ever mad at this point, not in 1929. Paulie Pelosi is looking at this and he's like, Nancy, we did the right thing. We did the right thing by holding on to it. And she's like, I don't know about that, Paulie. The next thing you know, oh, wait a minute. We're back down to another bearish trend. I know it's difficult to see these marks on here, but we're way down here at this point, right? From the high to here, we're down 13%. Well, that's nothing, right? I still hear back in my 1929 black and white YouTube, they had YouTube back in the day, but it was in black and white, and then some radio, right? Some radio, maybe even our record players. That was it, right? The YouTube was available on record only, and in theaters. So you would go into the theater, right? They'd spool up the old school projector back there, right? And then the YouTubers would come on and be like, man, I need hang on. I do have a voice changer. I was about to say, I need a voice changer. I have a stream deck now. I got to figure that out.
Yes, that's right, everybody. Now's the time. Get in while you can. We are looking at clear blue skies ahead. All you got to do is buy the dip right now because it is only going to go up from here.
All right. So they did have podcasts back in the day. It was called radio. Yes, exactly.
Yes, Don, Mr. Don. Thank you, Don, for that insightful wisdom right there. And he was also telling everybody, buy the dip. I don't know what you were thinking, Don. Buy the dip, buy the dip, buy the dip. And then
Nancy was like, oh, Polly, listen, Don may be crazy. Don, the guy on the radio that we're listening to, he's not so sure about this dip thing because it's down 13%. I'm not so sure about this Don guy, but you know what? Let's put our faith in him. And then the next thing you know, holy goodness. Oh my, oh, it hurts. Oh, make it stop. Ah. Yeah, it got real big real fast. Okay. So from the high to the low, that was, 45%. So half of your investments are gone. Nancy, she's over there. She got a hammer and she's beating Polly Pelosi on the head. If you know, you know. She got a hammer and she's beating Polly Pelosi on the head, being like, I told you so. I told you not to do this. Then Don's on the radio and he's like,
I will never financially recover from this.
If you know, you know. That was a good Tiger King reference right there. And buy the dip more harder. Buy the dip more. Wait.
Don came on the radio and Don's like, buy the dip more harder. Everybody go out there and buy the dip. I tell you what, back in my day, everybody was buying the dip. We need to know that you got to buy the dip to make it go up higher because we all need our investments to go up. So everybody go buy that dip right now.
Okay. And so we're looking at this and we're like, okay. Maybe this is not working out as well as we planned. But you know what? Maybe it's going to recover. Let's see. I do not know how long it takes to recover. It's not looking so good. Oh, it's getting worse. Oh, man. Well, what we're seeing here is the market told you the direction it was going to go, but not the magnitude of how long it was going to do that. Now, wait a minute. Wait a cotton picking minute.
See, I told everybody to go buy the dip. Over here, it started to come back up. Yes, that's right. My name is Don the trader, and everything is going back up right now. If you were only listening to me, you wouldn't feel so dumb.
Nancy's looking at Polly Pelosi, and she's like, fine. You know what? Maybe now is the time to get back in, right? I mean, the market only went down 40-ish, 45-ish%, right? But you know what's happening is that the 10 went over the 20, price went over the 50. In the span of a few days, we're up about 5%. That's not so bad. I will not stop with the speaker. And if you don't like it, you don't have to watch it. See you later. Back in 1929, why did I listen to that shoe shining boy? Why did I take advice from an 11-year-old? Exactly. I will continue to use it and I will go even more. Yes. So looking at this, we're looking at the trends starting to come back up. And you know what? If you were smart like Nancy, you would know you didn't have to hold on a 45% decline, because had you got in, and let's say, I don't know what's going to happen. I literally don't know what's going to happen next, but let's say that it did go back up, your investment would be up 43%. Where Don's on the other end of it, trying to recover his gains, you're already up 43%. Yeah, we're going to double down on this. Don, 1929 Don, I will call the market cycle. Yes. So we're looking at this and it's like, okay, we got a little bit of recovery going on. I don't know what's going to happen. Let's just let this play out and see. All right. Things are actually recovering nicely. Look at this. In 1930, all is great. If only I had avoided all this huge, nasty downtrend. Oh, wait a minute. Oh, no. I could have actually made money on its way back up. Right? Maybe about 12% or so. And then we see another downtrend. What happens now? Oof. Sideways trends, slightly up trends. Oh, here's a great example, right? The 10 went over the 20, price went over the 50 right there. That happened right there. What happened? It came back down and went the other direction. Again, it tells you which direction it's going, but not the time frame or the magnitude. And we're back out. Yeah. Hold on. Stocks are crashing up. That's exactly what we're looking for. And we're back out. There you go. Right. So this is what happened in 1929. So you, as an astute investor, could have seen this coming and got out of the way before the big nasty crash, right? Now, remember, whenever we're looking to trade, we understand that we won't be able to get the very bottom and we won't be able to get out at the very top, but we can take all of the meat in the middle of the sandwich, right? All the meat in the middle of the sandwich, because it showed you right here and right here where to get in and where to get out. Let's continue on to the next stock market crash. How about August of 2000? This worked in 1929, but this random guy on the internet, Chris, has no idea what he's talking about. There's no possible way that 1,000 years later in 2000, 81 years later, in August of 2000, there's no way, August of 2000, that this same theory would hold out. There's no possible way. I can't believe it. Just for a moment. I think I have to turn off replay, leave, and then do it. No possible way that this could still be the case, right? There's just not any chance that what this random guy on the internet was talking about, which clearly my notes are in place here already. This random guy on the internet would have the same thing happen. The number 1 decline and then the number 2 decline. And what do you want to bet? Number 3, 4, 5, 6, 7, 8, 9, 10, etc. all look like. I'm just saying. I wonder. All right. So looking at this, well, we did have lots of choppiness, right? It went over, it went under, it went over, it went under, right? We can see that happening a lot. And that's a really frustrating market, right? Again, the same crossover can result in very different outcomes multiple times over. It shows you the direction it's going, but not the magnitude. Now over here, that's where we really start seeing it stack up. The 10 went under the 20, price went under the 50, went down 5%. Then it went down another 5%. Then it went down another 18%. So cumulatively, we're talking like 25, 30% move down, and then even more down here. So the total down move from the top, from the tippity top, oh no, it actually got worse. Got worse than I thought. Oh man, this was in 2000, kept crashing all the way through 2022, finally bottomed in 2023. Now, were there times where the trend corrected and went the opposite direction? Yes. But this is one of my big mantras. Write it on my tombstone. That's a 50% decline over the course of a couple years. 931 trading days. 3 years, right? Give or take. Looking at this, you don't want to be buying stocks as they're crashing down because you don't know how far down they're going to go. But if you buy stocks that are crashing up, think about it logically. If you don't know how far it's going to crash down, what if you bought it on the way up and you don't know how far it's going to crash up? Ooh, hang on a minute here. Right? Think about it logically. Don't buy the dip because you don't know how far it's going to go down. But if you buy the rip, you don't know how high it's going to go up. Is this clicking? Type C in the chat for yes, this is clicking. Yes, this is clicking. If you are like Don, old Don's still on the radio from 1929, but he's still somehow kept his job. And he's like,
now's that time, ladies and gentlemen. It is time to be buying the dip. If you have not bought the dip already, go ahead and start buying some as it goes down 5%. We're down 10% now, but that's okay. Buy the dip. It's only going to go up from here. Duh. Imagine the incredible sale of stocks that you're getting right now.
As it continues to go down, and then down and down and down, and down 50%. Down 50%. Don somehow still has a job. I don't know how he still has a job, but he does. Everybody's clicking C. Very, very cool. I appreciate that. We're all clicking, right? And then you get on the opposite side here, and wait a cotton picking minute right here. Wait just one cotton picking minute. If you had bought the dip like Don was telling you, and let's just say right here for ease of use, let's say you finally bought the dip like Don was saying, and stocks had crashed down the whole way, or you decide to buy the rip like Chris is saying, and you bought in right here, 10 over 20, price over 50, you would be up 33% by the time Don is just getting back to break even. I'm sorry, Don. Dude, thanks for being part of this, Don. Everybody said Don in the chat. Don lending us his chat right here. I appreciate you, my dude. Looking at this, if you bought the rip as stocks are crashing up, you're up 33%. If you bought the dip like poor old Don told you to do, you just got back to break even. You wasted years, like this from 2002 to 2004. You wasted 2 years. You probably lost all your hair. And now you're like, frick, this guy Don has no idea what he's talking about. Maybe I should be listening to Chris. Even though Chris was in his final year of high school. Chris graduated high school in 2004. But I'll tell you one thing. Chris had no idea what he was doing over here. But Nancy Pelosi sure did. Nancy Pelosi sure knew what she was doing in 2004. So we've shown you the first two. You know what? There's no way that December 1972 would do the same thing. There's no possible way. 1972, 1201. There's no possible way, right? Oh, snap. Look at that big, nasty down move. Yeah, that big, nasty down move. And you can see right there, it's showing you the direction it's going. 10 under 20 lasted for a long time. Now it popped up. Remember, it shows you the direction, but not the duration and magnitude. Pops up right here, and then it comes right back down. Popped up right here. Oh, Chris, you don't know what you're talking about. You're not a real professional investor. You're just some other joker on the internet. I'm going to go listen to like Jeremy or Felix. They know better than you. Fine, go ahead. I don't care. It does not hurt my feelings if you go watch any other channel. By all means, get out of here. But looking at this, right? Oh, there it is. There's that big, beautiful up move we're all looking for. We're back in business, baby. The only thing that's going to happen is this moonshots. And then, ooh. That's brutal. That's brutal. But that's also trading. I want to point out a couple spots right here. This right here, where it popped over and then popped under. An astute investor, an astute, smart investor, an outlier, as you might say, could have taken this trade. And he might have got out at break even. He might have made a buck or lost a buck. But he certainly was not there all the way down. And maybe here too. He might have made a buck or lost a buck. But he certainly would not be losing all of his bucks on its way down. And then over here. Oh man. The last 3 times Chris told me that this trend is going to reverse, it didn't. In fact, it only popped up and then went right back down. This guy, Chris, doesn't know what he's talking about. Again, remember, every single time this happens, we don't know the direction and we don't know the magnitude. And if you look at previous instances, there were different buyers and different sellers. So every different time that it sets up will have a different outcome. Most people really struggle with that, especially the most intellectual of us, right? People who want to brag about where they went to school. You do you, bro. I don't care where you went to school. But I do know one thing. The market shows you where it's going. But you can't let previous biases get in the way of current trades. Because you can see right here, while it may have not worked out the last 3 or 4 times, this sure as blazes did. Look at that. How high up did that go? From here to here. That went up 32%. That move right there went up 32%. And you don't need an Ivy League degree to do this. You don't need any sort of special advanced knowledge to do this. I'm showing you right on the chart. 3 moving averages. That is it. Your 10, your 20, and your 50. When your short term, intermediate term, and your long term are all working together, it can go a long time. But it also may not. It also may not. You as a trader have to understand that we are looking for opportunities, and sometimes the opportunities are very, very short and they just don't work out. And other times the opportunities are very long and you can actually make a buttload of money. But if you bought these dips right here and you didn't sell because you're like, no, it has to go up. This random guy on the internet says that anytime it crosses up, then it's a bullish trend. You have to cut your losses short, then let your winners run out of control. Now, I could do this on literally every single stock market crash. Every single one. In fact, let's go to 2022. Most of you guys have actually traded through this. I don't know if you remember this. Chris actually was down 20% that year. Chris learned a lot during that time. My compound annual growth rate, before you're like, oh, wait a minute, I can't listen to this guy anymore. My compound annual growth rate of the last 5 years has 172% gain in 2021, negative 20% decline in 2022, positive 5% increase in 23, a 90% increase in 2024, and roughly a 30% increase in 2025. Yields a 44-ish% compound annual growth rate. Do me a favor. If you are one of those Reddit guys like Chris Chains, who's like, no, that's nothing, by all means, there's great channels with all kinds of morons who run those. Go watch one of those. But if you understand that what we're talking about here is generational wealth building opportunities, you're in the right place. Make sure you subscribe. Maybe even like the video too. But look at this. Buy stocks as they're crashing up because you don't know how high it's going to crash up. You don't know how high it's going to crash up. You don't know how high it's going to crash up. Don't buy those stocks as they're crashing down because you don't know how far it's going to crash down. Now, again, I could do this on literally every single stock market decline in history. I don't think you need to worry about if a 2008 style crash is on the horizon until you start seeing the 10 go under the 20, price go under the 50. At that point, maybe we can start talking. Now, again, the market is absolutely crashing down to prices not seen since Monday, December 22nd. The market is crashing down to prices not seen since 18 trading days ago. Okay. Am I telling you to bet the farm, go all in, buy the dip? No, I'm telling you, have a plan. You'll know when Chris says buy the dip because Chris will say, go buy the dip. But it ain't going to happen. It ain't going to happen. The only time I'll say go buy anything is when it follows my plan and I'm going to go buy it. You do you. Now, again, you can get access to every single trade that I'm taking in the US Investing Championship linked down in a spreadsheet down below, as well as my full trading plan listed down below. I'm using this plan in the US Investing Championship. And in fact, why don't we check in on the US Investing Championship trades that I have on right now and see how they're doing? Now, this is 50,000 real dollars that we at the Outlier Fund have put together. This is our partner fund. And oh man, I got to log into my email to get a two-factor authentication. Talk amongst yourselves for just a moment here while I do that. Talk amongst yourselves. My password is monkeyhammer4206969. Okay, cool. All right, give it 1 second here. Come on. You can do it. I think it's loading now. Yeah, we're loading now. Okay. And we're going to start live trading. This is not paper trading. Start live trading. And let's take a look at our trades that we have on at the moment. Now, as that's loading, let's come over here in trading view. KGC up 5% right now, right? Bought it as it's crashing up. Looks like we definitely need to roll that. That is looking gorgeous. How about PPTA? We rolled this one once already. In fact, did I roll KGC the other day? You know what? I don't remember, but every single outlier has access to the US Investing Championship Outlier Trading Room. And you can actually see every single trade that I take on in the US Investing Championship. And even when my wife and I stopped and had lunch and I was rolling trades anyway, rolling the KGC. Yes, we rolled this one on Friday. Then PPTA, we've already rolled once, maybe twice. NEM, looking gorgeous. I love it. Very happy with that. MP, up 3.66% today. Now, these are my actual trades. I'll show you in the actual Outlier Fund. Now, I do have one that's not performing. That's SPXL. This is still part of the plan ETF. And you know what? This is not working out at the moment. And that's okay. That's okay. Winning is a unavoidable part of trading. Winning is unavoidable. It is unavoidable and completely 100% necessary. Losing is also unavoidable and 100% necessary. That doesn't mean every trade is going to look like that, right? Win or loss. Let's go to OR. OR, rocket ship. OR is a rocket ship. Chris bought it right here on the top of this order block right here. Rocket ships to the moon. Ego is crashing into an order block right now. So I'm going to go into my trading plan and I'm going to show you the plan for the day with Ego. Ego, by the way, you're getting a sneak peek at the Outlier trading plan for the day, because I'm going to go to my emergency exit plan and show you exactly where I'm going to get out. Where's my emergency exit plan? Right here. Day trading order blocks. If a stock runs up into an order block like Ego did, this order block right here goes back way back. Let's zoom out real far and see how far back it goes. Ego all the way from, August of 2013. Now, what is an order block? These are areas that are marked on the charts. Now, you can make your charts look exactly the same as mine. All you got to do is go into our Discord after you become an outlier. Go to FAQ and member contributions. Go to the trading view section right down here. Click that. You can get the official 4.2 indicator for deep thought. That is the exact order blocks that I'm running right now. In fact, I'll show you. The deep thought, if I turn it off, oh no, they disappear. If I turn it back on, oh, they're there. You can have order blocks just like I have. Now, order blocks are areas where there are trapped buyers. Okay, trapped buyers because they did not want to exit their trade as the trend reversed against them. Now, you're probably thinking to yourself, well, there's no way. That is just random noise on the chart, Chris. There's no possible way that these areas actually prove to be any sort of support and resistance. Well, how about this? August of 2013, Ego's price went up and then came right back down and went sideways for a while. The very first time it came back up into here was an entire calendar year later, August 2014. August 2014. What happened? Oh no. There was something waiting around the corner for those who bought. running up into this order block, and we call him the monkey hammer. The monkey hammer was there waiting to take out the people who decided that order blocks don't work. And what happened? Yeah, goodbye. It's gone. It's over. It's cooked. It's cooked, as the children would say. But no, totally random spot on the chart that started this huge sell-off. Then more order blocks were created even lower and even lower and even lower, right? So the very first time it ever came up in this area, monkey hammer. We keep going. Keep going. More order blocks being created, right? Now, order blocks do eventually get chewed up by the sellers being replaced by more buyers. And you can see these ended on this big, beautiful trend up. Now, we're coming right into it for the very third time ever in the history of time. 1, 2, 3. Are there still buyers all the way back from 2013 to today? Maybe. Maybe not. I don't know. But I do know one thing. This is part of my trading plan. If I have 2% room up to an order block, I'm interested in taking it. Now, I am a professional investor, unlike most jokers on the internet, and I actually have rules and a plan. So now what I'm looking for is on the 5-minute chart. If this crosses back down, the 10, 20, and 50, same lines, but now instead of on the daily chart, on the 5-minute chart. If the 10 and 20 do not cross down during the day, I will hold it the entire day. If it closes above the order block, I will hold it on the other side of the order block. If it closes inside the order block, I will close my trade. So no crossover means I'll hold it all day long. If there is a crossover, and pardon me while I drop you guys off for a moment, if there is a order block right here and it smashes into it and crosses back down on the 5-minute chart, then this is where I will be getting out. This is where I'll be getting out. So let's pop over into the 5-minute chart. And let's take a look. So the 10 is over the 20 and price is over the 50 on the 5-minute chart. So dunk. I don't know what you're seeing, but I'm not seeing the same thing. On the 5-minute chart, the 10 is still over the 20, price is still over the 50. So what I'm going to do is I'm going to create an alert. I can figure out how to do it correctly. Let's see, create alert, add alert. Here, when the 10 EMA crosses the 20 EMA. So when the 10 EMA crosses the 20 EMA on the 5-minute chart, I will get an alert on my phone. I'll get an alert on the computer. So no matter where I am in the world, I will get that alert. And this happened to me in December twice while I was in the shower in the same week. Both times happened while I was in the shower. So I'm running through the house with a towel on, just towel and a smile to go close the trade. Maybe that'll happen a third time today. I don't know. But we are solidly within this daily order block. So I will change into the 5-minute zone right here. Now, if something crazy happens, and I'm not going to tell the market what to do, if something crazy happens and it goes up here and closes above 46.75, then Chris will hold it. Is that likely to happen? I don't know. I'm not going to tell it what to do. All I need to do is follow my plan, right? So I'll know what to do. Easy fix. Just don't take showers. Don't shower today. All is good. All is good. So that is the plan for the day. These trades are looking brilliant. Now, what about SPY? Shouldn't I have already closed SPXL? Shouldn't I have known? You are a professional investor, Chris, but you didn't know. All right, wait a minute. Wait, I think there's someone at the door. I think I hear somebody at the door.
Knock, 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 knock. It's Chris Chains. Still him. Hit a couple for the door frame. Too loud. Gold Lambo parked by the slow lane. Rev it. Pool shape Lambo, yes, no shame. Iconic. Knock, knock. It's Chris Chains. Don't ask me how. All buys never sell dates. Why would I? If it pump, then I'm self-made. Built different. Risk management couldn't tell me. Never needed.
Oh, Chris James, if you such a great investor, why didn't you know the price gonna go down? Didn't you know that, boy? Yeah, boy, didn't you know the price gonna go down? So you had to sell it, right? I bought all the puts on Friday, didn't you? Of course I did. Just give me $20,000 for my course, and then you'll know when to buy those puts too. But don't listen to anything this guy Chris talking about, because moving averages don't matter. They don't know nothing. They don't know nothing, right? And just listen to me, bro. Just trust me, bro. Prices only gonna go up from here. Only gonna go up from here. If you ain't bought the dip yet, you just a po' boy. You just a po' boy. I got that Lambo shaped pool. I got 7 Lambo parked around my Lambo shaped pool. I got all the gold and all the ice and everything. If you ain't dressed like this, you know you ain't a real millionaire. You know you ain't a real millionaire. So listen. Don't listen to anything that guy is talking about. He ain't no professional. He only have 44% gain per year. Christian got 454% gain per year. 454 in my cutlass and 454 on my percent per year. He's just a joker. He don't know what he's talking about. So yeah. Don't do anything. It's just buy a dip all day, every day, baby. Let's go. Buy that dip. Yeah, boy. Gotta find the button.
Knock, 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 knock. It's Chris Chains. Still him. Hit a couple for the door frame. Too loud. Gold Lambo parked by the slow lane. Rev it. Pool shaped Lambo, yes, no shame. Iconic. Knock, knock. It's Chris.
Oh, what happened? I blacked out there. I blacked out there for a second. I feel like Chris James was coming in to school me on how it's done. No. Don't be buying the dip. Whatever you do, don't buy that dip. So have a plan, execute the plan, and then maybe one day you'll be a millionaire and dress like Chris James. Exactly. In fact, let's go into the Trader account here. Oh, I didn't get to really show it off real quick. Wow, only up $8,000 right now. That's not bad at all on a $50,000 account. Geez, what kind of gain? Oh my good gravy. Oh damn, I should have put this in the regular video. Oh my good gravy. This is looking amazing. I wonder what my account actually looks like. 63,000. Damn, son of a gun. Rudes, can we somehow edit this in? Because this is great. $63,000 up on this $53,000 or on this $50,000 account. What is that? 63. So 13 divided by 50. I'm only up 26% on the year. That's not normal. That's not normal at all. You guys have a fantastic day. Thank you so much for coming. I hope that this was useful, and we'll talk soon. Oh yeah, if you're ready to save time, make money, and click save time, make money, start winning less risk. Click one of these 2 videos. We'll talk soon.